Well, good afternoon, everybody. It is a great pleasure for me to be joining you at what I think it's fair to say is a very interesting time for banking and finance in Australia. Can I thank you, Karen, and your executive for the invitation? I was delighted to receive it, and I look forward to some interesting and lively conversations after some of my remarks. I have been asked to speak to you today about the task of re-earning trust. I've acknowledged in this slide that that is a long road, and many of you will have heard the saying that trust arrives on foot and it leaves on horseback. We know in the banking sector that in order to re-earn trust, we're going to have to earn it one footstep at a time. I wanted to talk more generally about trust before going into banking. There is a global trust index compiled by Edelman Research that is published every year, and they test four main domains of the non-government organisation sector: business, more generally, government and media. What we see is from those people who you might regard as the informed public, people with, say, higher levels of education, we see trust declining in almost every area, and again in the general population we also see, I should say, when it says plus signs there, that's not good. The plus is it's a higher level of distrust. So it would be easy, I think, for cheap shots to be made about the levels of distrust in media at an event like this. But can I say, I don't take any comfort from it, and I don't believe that the sector that I represent takes any comfort from it, because the reputation of banks and the work that they do with customers and their contribution to the economy is, in many respects, understood by the public by what they read in the media, what they see around them, and it's also what they hear about the sector from politicians and from governments. So when you see declining levels or increasing levels of distrust in both government and media, it doesn't make it any easier for business to re-earn trust for the work that they do. I noted basically last year there was a slight improvement for business, but it did not translate to banks. The business category, as you'll appreciate, is a very large one. So we've seen an increase in 2018, which is the most recent data from November last year, a further increase in distrust overall, and the level of trust in that, you see that light blue bar at the bottom, is not an easy task for banks. So I'm really acknowledging as I begin my comments that the task is a very big one. And it's always hard, I think, to know if you've hit rock bottom, but it does feel in the sector that if it isn't there, it's very close. So what is the community telling banks? What is it that they want to see? And it's pretty straightforward. They are telling us there need to be consequences for actions that are wrong. They need to see that, and they feel there hasn't been enough of it in the sector. That you re-earn trust by being trustworthy. And on this one, I always like to say, when you behave your way into a problem, the only way out of it is to behave your way out of it. And that actions speak louder than words. There is a growing intolerance in the community generally for listening to people saying we are going to do, we will do. They want to see it, they want to feel it, and they want to know that it's real. In terms of what they want from banks, they want to know that banks will stand by them when times get tough. And if you think about some of the case studies that were presented at the Royal Commission, I think people's view of it was heightened by the sense that many of the people who were having difficulties were having them because they were already having a tough time. And at a time when they really thought they needed a partner, their bank in those case studies was not there. They want their bank to behave responsibly and to be trustworthy, and they want them to put the customer first and to mean it. So, as we know, we've had a Royal Commission. Before the Royal Commission report at the beginning of this year, the ABA and myself went out on a sort of listening tour of regional Australia. We went from Dubbo to Bendigo to Roma, with more to come. And we did that because I know from previous experience in public life the power of sitting down, particularly in regional parts of Australia and rural Australia, just cannot be underestimated. People in those places often feel very isolated. They often feel that their voice is not heard, and they put a high value on the opportunity to come and speak with someone who they think can understand their problems and translate that into action. So, we met with financial counsellors, we sat down and met with groups of graziers, and in some cases people had driven, as many of you would know when you've been out into these parts of Australia, they'd driven 3 or 4 hours because the issues were so important to them and they wanted a chance to be heard. The Royal Commission could be seen in many lights, but as someone who has experienced a number of disasters and crises in other parts of or other times in my working life, I know that out of a crisis can come very positive and powerful change. And you can either look at a big report like the Royal Commission and be profoundly depressed by it, or you can see it as a catalyst for powerful and effective change. I want to reassure you that's the way I look at this, and that's the way the Australian Banking Association looks at it, and it's the way that the leadership of our banks are looking at it, and that is a very explicit conversation that they are having. How do I use this to leverage change in my organisation? How do I use the findings in this report to be a catalyst for a big cultural paradigm shift? So there were 7 rounds of public hearings held over 68 days. More than 130 witnesses were questioned. They reviewed over 10,000 public submissions. And at the end of it, we got 76 recommendations. 29 of those 76 are for banking, and 5 of those relating to banking are for agricultural lending. The 29 for banking, the rest go to other parts of the financial sector, so insurance, superannuation, all of which, particularly in the insurance sector, have an impact on agribusiness and people who live in rural and regional Australia. But I was just going to concentrate my comments in relation to banking. So the recommendations that directly affect those in the agribusiness or agri-lending sector is firstly a recommendation for a nationally consistent farm debt mediation scheme, greater assistance for farmers in distress, ending default interest on distressed agricultural loans, and a change to the definition of small businesses, and making the provisions of the Banking Code of Practice enforceable. So I'm just going to go through each of those quickly. Farm debt mediation. The recommendation was that a national scheme should be enacted. Some of you might know a bit about farm debt mediation, but for those of you who don't, it is what it sounds like. When farmers are in trouble with debt, rather than both parties taking the matter straight to court, this is a process where the parties agree to have a facilitated mediation where they can come to some agreement about the best way to deal with a distressed loan. And it means that, it basically means that the customer is not having to face the prospect of very large legal costs in order to get the bank to the table. And it means that for both the bank and the customer, there's a third party making some judgments along the way about what is a fair outcome and what is the right course of action. Can I just say on this one, because I'd like you all to get behind it as farm writers, I can't count the number of inquiries in the last 10 years that have recommended this scheme. I have yet to find a single politician on any side of politics who doesn't think it's a good idea, and I still can't find a politician who's prepared to make it happen. So there are schemes in Queensland, New South Wales, Victoria, and I think South Australia has some scheme, but that means there are some farmers who have no access to this nationally, and there are some farmers who on one side of the border have access to one kind of scheme, and on the other side of the border a different kind of scheme. It is time for us to just fix this, and it is not a difficult thing to do. Well, it probably has to be done through COAG and through the cooperation of the states, territories and the federal government, so I don't want to underestimate how those things can often play out. But I know from my own experience that when there is something that is clearly in the public interest, you can make those things happen very quickly through COAG, and I think this is one that would make a real difference. There has been no impediment to this, but there just has been no political impetus behind it, and successive parliamentary inquiries have recommended it. So I think now that it's a Royal Commission recommendation, both sides of politics have, in their response, said they'll do this, so we've got a real chance of seeing it happen. And I hope that you hold them to account on that. There is a recommendation of 2 banks about providing greater assistance to farmers in distress, requiring banks to ensure that those loans that loans are managed by experienced agricultural bankers, that banks offer farm debt and mediation as soon as a loan is classified as distressed, to manage every distress loan on the footing that working out will be the best outcome for the bank and the borrower, and enforcement the worst. Recognise that appointment of receivers or any other form of external administrator is a remedy of last resort, and cease charging default interest where there is no realistic prospect of recovering the amount charged. I think, these are, for those of you who have been writing in this area for some time, you will know that given the nature of farming and how susceptible it is to extreme weather events, and other external factors like plagues and pests and other things that are out of the control of the borrower, there is from time to time, very sadly, loans that become very distressed, and they have to be dealt with. And I think this goes a long way to putting into writing and into practice. I should say many banks do much of this now, but this will make it much clearer that this is standard practice and can't be just an ad hoc, something that farmers can hope for. The third recommendation is that the Australian Banking Association should amend the banking code to provide that while a declaration, that is a drought declaration, remains in force, or a natural disaster declaration, that banks will not charge default interest on loans that are secured by agricultural land in an area that's affected by drought or natural disaster. I should say that a number of banks, including a number of major banks over the last 12 months, have announced that this is their new policy and that they won't be charging default interest. But if it goes into the banking code, it then becomes enforceable and will apply to every bank that is a member of the Australian Banking Association. There is a further recommendation that the definition of small business should be amended and this is in the banking code, to apply to any business or group that employs fewer than 100 full-time equivalent employees, and where the loan that is applied for is less than $5 million. The significance of this definition is that for small businesses, including rural businesses and farms that fit into that definition, they qualify for a new set of contract provisions that effectively are what is known as covenant light. That is, there are very, very limited circumstances where a loan can be enforced where monetary payments are still being made. So that has been a source of contention in the industry, and that is one that banking industry, I should have said, we have yet to make public the banking industry's response to all of the 29 recommendations. We're very close to doing so. As you will appreciate, there's a lot of things at stake, and we are just giving some further thinking to what, if any, consequences there might be. So, as I said, I'd love to be here breaking that news to you today, but we're just not quite there, but we're very close, and are moving with a sense of real resolve on this. And the final one is a recommendation that in respect of the banking code, that the ABA and ASIC will take all necessary steps to have the provisions that govern the terms of the contract that's made between the bank and the customer or a guarantor designated as enforceable code provisions. Now, it's interesting, the courts have previously held that the provisions of the banking code are an enforceable part of the contract that the bank makes, but it's subject to those court decisions which have particular characteristics, so may not apply in every case. Banks have long regarded the provisions of the code as enforceable, but if this new provision in relation to ASIC will put it beyond any doubt. And I think it is really important, if you're going to have an industry code, and many of you are journalists, you understand about the Journalist Code of Ethics, people have to feel that there are consequences for breaching it, for it to be a powerful tool. and for it to be a tool that really will effectively shape culture. So those are the recommendations of the Royal Commission. There are a number of other commitments that banks have made in the last 3 to 4 months during the Commission hearings, and they've made a commitment that all fees for no service will end. That is, that people will only be charged advice fees where they have signed up for them, and they'll do that on an annual basis. Banks have announced that they will support removing what is called grandfathered provisions. Basically, that's in relation to financial advice. Some years ago, 5 years ago, the government of the day basically legislated to stop financial advisors getting payments of commission for years and years and years after the original advice, but existing contracts were protected. 5 years on, banks have said we think those contracts should no longer be grandfathered and protected, and the Royal Commission has also recommended in that case. You will be aware that some of the most, damning commentary around the Royal Commission was the treatment of people's deceased estates and fees that were charged. The code we have committed, the industry has, to putting in place new components of the banking code that will oversee and manage the way that deceased estates are dealt with. So where to from here? As I said, it is a very long, hard road to being trusted again. And the industry has acknowledged that what it really needs to do is reconnect with the core business of banking. A number of banks have already decided that, having purchased and integrated other kinds of businesses like wealth businesses, insurance businesses, that a number of banks are now in the process of either selling those or going through a demerger and getting back to the absolute core business of banking and doing that as well as they can. It would be easy to think that the Banking Royal Commission is the only thing happening in banking, because some days that's what it feels like. But of course, the real business of banking goes on every single day. And right now we've got a number of customers across Australia doing it very tough. This is an ad that the ABA put in regional newspapers in Queensland last week, and will continue this week, imploring customers who might be affected by some really shocking natural disasters in that part of the world to contact their banks. Banks have always been very quick to react to customers who are going through natural disasters. They do have things they can and regularly do in these circumstances, including deferring loan repayments, waiving fees and charges, assisting with debt consolidation, and in some cases financing to help cover cash flow shortages. And we always put out a press release, but it doesn't always get picked up. So, just in terms of how you change and how you think about every single footstep, at the ABA last week we thought, actually, this, just putting out a press release and hoping people see it, that's not good enough. We need to be more proactive. We need to go out there and say to customers, you're not alone. You don't have to deal with financial stress as well as every other stress. Contact your bank now. They are ready to hear from you. And I've told you the things that they do, and these are very regularly. These are circumstances and initiatives that are very regularly put in place when there is a natural disaster, including droughts. So it doesn't have to be an out-of-the-blue natural disaster. It can happen in long-term events such as drought. Assistance also includes, as I said, offering to cover cash flow, deferring credit card payments, increasing emergency credit card limits, waiving early termination fees for customers who want to access term deposits, and in some cases, banks such as NAB and CBA have very recently announced that they will make concessional loans available to people in these circumstances. So, there's a lot happening in the banking sector. I am very happy to take questions on any of it, but I did want to touch today on Royal Commission, and I think if I can leave you with the same message I started with, the banking industry and the Banking Association genuinely and sincerely believes that the Royal Commission is a catalyst for change and is a powerful tool for a significant shift in culture inside every single bank, whether it's large or small. every single step they take is going to matter, and we hope that many of the things that are being done will start to be noticed more and more by customers and indeed by people such as yourselves. So thank you.